Hey guys, Dave Keller here with Market Misbehavior. I get the opportunity to interview a lot of people, strategists, analysts, money managers, about what they're thinking about the markets. And one of my favorite questions is, what is their one chart? That means if, besides a regular chart of the S&P 500, if you had one chart that you could monitor, that you could look at, that would give you a good read on the markets, a good overall tell, what would it be and why? So I want to share with you today my one chart, and it's actually the TLT, which is the long bond future, long bond ETF. And basically, what you see with the TLT is it had a fantastic run. This is when bond prices are doing fantastic, when stocks over bonds coming down because bond prices are rallying much more than stocks are recovering. But then you have the last 3 months where you can see this transition from accumulation to distribution, where there's better selling, where this consolidation pattern of lower highs and higher lows is broken to the downside, retested, and then kind of gone further. So overall, it's transitioned to more of a bearish phase. The reason why it's important right now is in the last couple weeks, as bond prices have rallied, especially the last couple days, a couple big days to the upside, I've heard people speculate, oh, this might be it. Stocks starting to pull back, bonds rallying, this is the beginning. And one of the benefits of charts is helping you connect the short-term movements, the short-term rally in bond prices, with the long-term perspective. What are the longer-term trends telling you? And in my opinion, this is nowhere near bullish yet, and I'll tell you why. First off, bond prices need to reclaim the 50-day moving average. They tried to do that yesterday on Wednesday of this week, Thursday, right back to the 50-day. So until they do that, the trend, the short-term trend at least, is still negative. Number two, they need to eclipse the last swing high, which was this resistance level from the end of October. So that's about around 140, 150 on the TLT. Until it breaks above that level, the trend is still down, right? We're having a pattern of lower highs and lower lows. So we established a lower low in November. Dow theory tells us an uptrend is higher highs and higher lows. So until we get a higher high, that pattern has not been broken and we're still in a downtrend. And then the third thing would be a break above trendline resistance from the high here in August, connected to the high in October. We would need to see a break above there. So those three things would all need to happen, and none of them have happened yet. So while the last couple days, last week and a half, even on the TLT feels very encouraging, and it certainly could be the beginning of something bigger, until we start to see those confirmations of breaking above resistance, key price levels, trend lines, moving averages, the trend is still down, primary trend. So that's my one chart for today, the TLT. If this sort of thinking about visualization, also investor routines and decision making is of interest, I hope you'll hit subscribe and check out some of the other videos on my network. Thanks so much.